Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media, check my financial opinions as we go through it. It's generally related to three different topics: wealth building, commodities, and or financial topics. Let's dive in. Let's take a look, see what's going on. If you want to follow me, it's at @Finance. And if you want to join our community, finding-value.com. We do have a question and answer session coming up later today at 5 p.m. Mountain Time. We will be covering how to navigate through TradingView, and I know a lot of people wanted me to do this, and we can do that, and we can do that doing real world examples, maybe going over the yield curve, some things on the macro picture that we can do it on. If that interests you, we do have a discount coupon code. Special is the discount coupon code, 50% off the first month only. And you can get a larger discount on the yearly membership if you'd like to sign up for a year. So Ron says, homes being built in my neighborhood have increased building costs, like 400 plus per square foot. Also, they seem to take significant amounts of time to build. And this was in response to someone asking the question, and it's down here. Should I buy a home in 2025? That was the question. And I don't look at a house necessarily as a speculative vehicle trying to make money. I think a lot of people that are on Twitter view their house as some gigantic speculation on making money. The way I view it, I want to lock in my costs. I want to do it at a rate and a payment that I can easily afford. So I look at things from an affordability standpoint, not necessarily from speculating on trying to make paper gains on the house that I live in. Now, would I buy a house today in 2025? I would. Now, that doesn't mean that if I were you, that you would. I would, because if I want to buy something or use my money in a way that can maybe increase my standard of living, the way that I could do that is buy a house with some acreage away from people. And I don't mind the neighborhood that I'm in. I do have a new neighbor that I'm not as fond of, but if I were to spend my money anywhere, that is where it would be. And what I would do is I'd put a big fat down payment down, like 50 to 75% of the house, and then take a loan out for the other portion. But that's not what most people, I think, do. They are newer individuals, first-time home buyers, and getting that down payment's tough for them. And I understand that. So I would not maybe do that depending on the area and the costs for, costs of home ownership versus renting. I would take that into account if I was a brand new first-time home buyer. But I'm not a new home buyer. If I wanted to buy an expensive house away from everybody, that's pretty nice. Yeah, I would do it. I wouldn't wait. But that's me. Bitcoin Teddy says Bitcoin is bad for the environment. It says world's largest gold mine, and it says world's largest Bitcoin mine in Texas is this. I hate to say it, but this isn't an accurate representation of what he's trying to show, I don't think. So this is kind of what I mean by it. It says gold can be mined without Bitcoin. Bitcoin can't be mined without gold. Guys, this is ridiculous. Number one, Bitcoin isn't mined. That's just a saying. It's something that people marketed to you, and you just eat it up. Bitcoin is nothing. It's zeros and ones that was solved from mathematical equations. It is not mined. It has nothing to do with elements on a periodic chart. It has everything to do with just zeros and ones that were made up mathematically by humans. There's no intrinsic value in that set of unique zeros and ones. We can replicate it, we can do whatever we can, and we can do it far more efficient than Bitcoin can do it in its current state. Now, another guy says, unpopular take, to be fair, all that Bitcoin mining infrastructure requires mining for raw materials. So raw materials that made this world's largest Bitcoin mine and all the computers and all of the things create gigantic holes like this because we need even more mining in order to make Bitcoin work. We have a ton of computers, which is a complete waste of energy and a complete waste of all of those computers and processing and the energy and electrons flowing through them. It is a big waste, in my opinion. Now, where is the value? Why do people buy Bitcoin? The value is that people want to make money. They don't want Bitcoin. They want what they can buy with Bitcoin. And what they want to buy is this hole in the ground. Not necessarily gold, but maybe silver and what silver provides in terms of computers, cell phones, all of these things and the circuit boards that these go into. That's the wealth. That's the value. So what I would rather own is I would rather skip the speculation on the currency and go directly to the value. The value is the silver. The value is the car or the components and the elements that make up the things that people consider to be wealth. Now, speculation-wise, Bitcoin has crushed it, no doubt. Money has flown into it. It has been one of, if not the top performer of assets over the past, I'd say, 10 years. But I don't know how to value it. Neither does anyone else. And it's a gigantic speculation, and it's only existed in the time frame of a technology bull market. And we are in a massive technology bull market bubble. When that bubble pops, does it pop with it? Does Bitcoin pop with the NASDAQ bubble or the technology bubble? In my opinion, the answer will be yes. I think it is in a bubble and it will probably pop with it. Now, could I be wrong? I could. But I don't want to try it out. I'd rather go be in the stuff that everybody wants to buy with the Bitcoin, the elements, the materials of that. Now, what I think could occur is that inflation will keep going. I think oil is going to get expensive and scarce. And I think interest rates and inflation will go up, 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 and up. I think energy costs will go up for a period of time, and I don't know if we'll solve it or not. And that is when people will figure out what is sustainable and what isn't. Because people are going to have to decide what they're not going to spend money on because they don't literally have the money to spend. So what you could see is that some people who are hurting, who don't have assets, if they have anything, they might have to sell whatever they can to raise money to buy food and energy. Because I think that's where the majority of money is going to go. And depending on how expensive energy gets and how much inflation we have, I think it will determine the valuations on the NASDAQ. And I think the NASDAQ is going to have to get repriced way lower. But that's my view over the next 5 or 10 years. Tracy says, we also have some other notable disconnects. We've got crude oil versus the 10-year yields in the pink. The majority, looking back in history, we've seen this correlation between crude oil going up and interest rates going up on the 10-year together. We have this big disconnect. A lot of people think that crude oil is going to go up a lot to meet the yields going up. Yields have broken to the upside, but it's premature, in my opinion, to say that we are 100% in the clear for yields to continue higher. I mean, it looks good, but I've always got that doubt, like, hey, you know what? Let's just make sure. So that's more opinions. Is this disconnect, and that how is this gap going to close? a lot of people say crude oil is higher. Some people will say, nope, we're going into a recession. These yields are going to be too high and that things will crash. And that very well could be the case too. Either argument is a strong argument that you can make in either direction. Peter Optimisto says natural gas, since January 2023, 2 years ago, the natural gas market has continuously had a surplus to the 5-year average. If the latest weather projections play out, the eternal surplus will finally be gone on January 17th, 2025. Storage report on January 23rd, 2025. So people are speculating that natural gas being in a surplus that we've been in the past 2 years is finally going to go away against the 5-year average. It says this has been the longest period of storage surplus versus the 5-year average since 2004, 2008, which was mostly because of storage capacity expansion utilization. Just an FYI. Unusual Whales, is 2025 a good time to buy a house? I already answered that one. 6 worst financial mistakes. Buying a nice car right out of college, panic selling during a market drop, buying too much house, not investing earlier, investing in something you don't understand, getting into credit card debt. What would you add? I think there are far bigger financial mistakes than what he has listed there. And I'm sure you guys are going, well, what the heck does what does he mean? Well, I think marrying the wrong person and getting divorced could be a larger financial mistake than some of these that he's got here. Another mistake that someone could make is, and there was someone at my work, he would go around and sleep with every chick he would hook up, and he would do it without using protection. He would just hook up, hook up, hook up, hook up. His plan A was plan B, that she would use plan B. Now, I looked at this and I'm like, man, this dude is just rolling the dice. And he was hooking up with a lot of girls. We're talking, 3, 4, 5, 6, 7 at the same time. And I'm like, dude, you're either going to get an STD of some sort, or you're going to get someone pregnant. And what ended up happening is he got someone pregnant. Maybe he got an STD. I'm not sure. I didn't ask, but he got someone pregnant, and that's going to be child support. So I think that sleeping around and doing all that stuff and choosing perhaps the wrong relationship could be a much worse financial mistake than anything this person has listed here. And that's kind of what came to my mind for young people coming out of college or something like that, or even older individuals. I mean, I'm not saying that having a kid is necessarily a mistake. That's not what I mean by this, but I'm just saying having it with the wrong person is definitely, I think, a financial mistake, especially if you don't really know them that well. It could be a big mistake. So that's where I think the 2 biggest mistakes are bigger than any of these here. And I'm sure there's other mistakes too, like another bad financial mistake that isn't on here is your health. If you don't have good health, you can drain a lot of money trying to fix yourself, depending on how bad you go off the rails. I know a lot of people who are getting cancers and getting all these different things that are relatively young. We're talking 40s and 50s. And I would say that's relatively young to have a heart attack or cancer or whatever. So I also think another, I don't know if it's a financial mistake, even though there's a lot of financial problems that arise from it, but having really good and clean eating habits where you avoid financial problems with your health and you live a higher quality of life. I would say that is one of the top things that I prioritize myself. And I'm not saying that I don't eat 100% clean, but I eat a lot better than probably the majority of people that I see. So those are the ones I would add. Is Finding Finance still pumping platinum for the fourth year in a row? Yes, I am. I love platinum. I think it's an incredibly good ratio. And if people want to make fun of that or poke at it, that's okay. What I did, and I can get into it real quick here, just to show you guys what I was doing. So I on the platinum to palladium ratio, and this is what some of the stuff that I offer on the website and whatnot is I play these ratios. And a lot of people say, oh, it's not going up. Yeah, but I'm in an asset that isn't going down either, like palladium is. So this is the palladium, or this is the platinum to palladium ratio. Platinum outperforms when it goes up, palladium outperforms when it goes down. And this also is evidence of where we're at in the cycle as we go through this cycle here. And there's deeper meaning behind all of these ratios as you price these assets against other assets. So buy palladium up here. So I bought palladium in 2005, which was right here, and I bought some in 2009. My cost, I think, was like $250 an ounce. My average cost, if you were to kind of rough it out, it's somewhere in that range. I wrote it all the way down, luckily, and I started watching a lot more of the ratios, I'd say in this area there and onward. 2016, stuff like that. But I swapped it April of 2020, and I was lucky to get it where I got it. I swapped it at 0.35. So what does that mean? It means every single ounce of palladium that I swapped, I got, so 1 ounce of palladium divided by 0.35 gave me 2.85 ounces of platinum. 2.85. So hypothetically, if I had 10 ounces of palladium, just to give you a nice round number, multiply it, those 10 ounces got me 28.5 ounces or 28 ounces with a little bit of frictional cost of the premium. So let's just say 28 ounces of platinum. Look at where the ratio is today. It's at 1-to-1. So if I swap my platinum back to palladium, I would get 28 ounces of palladium. So I took 10 in the beginning, purchased it at the ratios up here, and swapped it here. And I could swap it again if I wanted to with a 2.8x real on top of, that is a real purchasing power gain of palladium. 2.8x. So I'd have 28 ounces here, and I had 10 back here, so to speak, just to make the math easy. You could say 100 back here and 280 here. As this goes up, and I don't really care if platinum goes up by 50, 60, 70, 100%, and if palladium drops by 50%, I still win because I'm playing the ratio. But if the ratio goes back up here, back to where I was purchasing it at about 4.5, what does that mean? Well, I'd have 28 ounces, or I'd have 28 ounces is what I have down here. If I go and I swap it at 4.5, so if I have 28 and I swap it, so it's times 4.5, I now have 126 ounces of palladium. I originally started with 10. So that is an increase of 12.6. It's a 12.6x. So I made 12.6 times my money. And people are sitting here, does he think that platinum's still going to go up? I'm killing it, guys. I'm up 3x off my bottom in terms of physical metal. Now, you can do this with any of the precious metals. You can do it with gold, silver, platinum, and palladium, and rhodium. And I play the ratios like I'm showing you right here. I'm just showing you one of the things that I do. Now, I accumulated, and these buy points are going to last for a little while. You accumulate the bottoms here when things are really cheap. And if you accumulate it, you want to accumulate it when a metal is cheap against all of the other metals. So if platinum's cheap against palladium, gold, and silver, I win. I win big because I can enter this game when I know platinum is cheap. The other time in history when they were all cheap was here. 2009 palladium was cheap against all of the other metals. So I'll just swap them around. This is palladium versus platinum, and here's 2009. You can see it was real cheap against platinum, and this was the outperformance run there. We can also look at palladium versus gold. And palladium versus gold was cheap in 2009, which was right here. And then you can also look at palladium versus silver, which is super cheap in 2009. And then what I did is people would make fun of you. They'd say, oh, it didn't go anywhere. It's back to where it was, and it's still 2012, a few years out. It's like, that's okay. Just sit and do nothing. And that's what people can't do. They can't sit and do nothing. And then it ran all the way up. You went from a 15 ratio to 150 in terms of palladium versus silver. And that was that 2020 bottom of silver. I couldn't get a lot of silver with the premiums because they jacked the premiums way up and it was real hard to do. So I went into the platinum. But look at this was a big outperformance, and I think it will still outperform and go down here again. And that's the cycle. That's the cycle. And you know how much money I'm making in dollar terms? Because if we're in an inflationary environment, this ratio doesn't change with inflation. It just goes up and down based off the cycle. The cost curves of palladium and silver are going up. So it's about getting an entry point into the game, getting a foot in the door for the game. Once you're in the game, just sit and let it go. Like, this isn't something that's going to get you rich very quickly. There isn't a lot of things in life that can get you rich, quote, quickly. What this does is it's the least risk way to make a whole bunch of wealth. And I've been doing this since I graduated college. I first found out about ratios way back in the day between gold and silver. And I was like, well, that makes a lot of sense. Like, when I read that, I was like, that's the only thing that makes any sense to me. I read about Bitcoin. I read about the technology behind it. I'm like, this thing's crap. I read about ratios and the mathematics. And I'm like, dude, this makes complete sense. Like, this is the only way that you can value stuff when you've got currencies going all over the place in terms of their value. So when I looked at this, I'm like, what risk do I have buying a piece of metal? Pretty low. And then you can look at the cost curves. You can do all of these things. And generally at these bottoms and tops, depending on what you're looking at, silver at the top, bottom for palladium, generally they're trading well underneath their cost curve. Well underneath their cost curve. So if their cost curve's $25 for the high cost producers, this could be trading at like 15, or back here was probably like $4. But this was probably trading over here at like 15 or less, which was the higher cost producers' cost curve. Some of them were in the 20s for silver. So think about this. Just think about it. This isn't that difficult. If you get a good reading on the ratio, and not an or, an and you are well below the cost of the producers, the higher cost producers to produce the metal or the commodity, what risk do I have to load up on a metal at these locations here? What is my risk? It's nothing. I'm below the cost curves. So how much should I buy this? A whole bunch. Because when the market has a demand, an industrial demand for a lot of these different metals, specifically platinum, palladium, silver, and rhodium. Gold is more of a financial, a financial measuring stick is what I'll call it. So if I can buy below the cost curves, basically your supply declines and your demand, even if it stays stable, will eventually have to have higher prices. And if you're in an inflationary environment, your cost curves will continue to go up. What happens if you go into a very inflationary environment? Well, then this is going to be all gravy, in my opinion. Silver outperforming palladium, and that's where I'm located. And I'm located in some of these other metals because of the ratios. It tells me that I should be in that because they're historically cheap. So, yeah, I'm still pumping platinum, at least for myself. I'm going to be there no matter what because it makes logical sense. Now, would I go and buy a bunch of technology stocks now because everybody thinks that's the cool thing to be in? No. Well, why not? Because it doesn't make logical sense. The value isn't there. Hence the name Finding Value. I'm just doing things differently. And I'm doing it differently that people may reject or don't like. But that's exactly what works. I don't care what people think. I care what my returns are. And if I have to wait a couple of years for these big cycles to turn, that's part of the game. That is part of the game. And if you bought palladium down here in 92, you had to wait a while. So if you bought it down here, you waited a while. Oh, it's 1996. He's been waiting for 4 years. And then all of a sudden it does something like this and you swap it out somewhere over here. You just made more than any investor in the world. You're beating Stanley Druckenmiller doing this. You're beating Warren Buffett. You're beating Jim Rogers. You're beating everyone. And at the same time, you're taking less risk. There's no jurisdictional risk in holding a metal. And I hate to say it, it's out of the system too. You just bypassed all the system risk as well. And there's other benefits to this that I'm not describing that I won't disclose of as well, because they are physical metals out of the system. Earth's climate over the last 485 million years. So scientists have captured Earth's climate over the last 485 million years. Here's the surprising place we stand now. An effort to understand Earth's past climate uncovered a history of wild temperature shifts and offered a warning on the consequences of human-caused warming. And this is the degrees over time, and you can see that we've actually been going down. Global mean surface temperature has been declining over all of these years. Global warming is wrong. David Morgan, COMEX crisis, COMEX stockpiles sold out overnight. Big silver squeeze in his opinion. I don't know how legit, I don't know how legit some of these things are in terms of news, like these COMEX crisis. I don't know. It doesn't matter to me. Some people say, a lot of people get so obsessed with the news, the day-to-day news. I can give two craps about the news, guys. News doesn't move markets. It's not going to change my approach. It's not going to change what assets I own. Whatever is cheap, I buy what's cheap. Buy silver, buy palladium, and then I hold. And then in between, I don't do much. I just sit, enjoy, and make a whole bunch of money doing it. And it takes time. And you can do that across all the different metals. And if it's something that you want to learn, if you want to learn how to do this, sign up to the website, ask me questions, and we'll go over it. And I can show you how to do it. I can show you where to buy things, what to look out for. Do you buy coins versus bars? Do you buy rounds? Where's a good place to buy from? All of those things. Luke Roman says DXY versus the 10-year yield, and look at how correlated they've been. This is 2024. Anything that strengthens the DXY much further from here, tariffs, Doge, Fed, will quickly send the 10-year UST yields to levels that sets off a U.S. and global debt spiral due to the U.S. and foreign USD debt levels and $57 trillion in foreign USD asset holdings, including an $8.5 trillion in UST. So here is the thing that people, I don't think they realize. What they look at is they look at the pricing today. That is not how you play the game. You play the game by looking out into the future. And what's happening here is the dollar is strengthening. It's strengthening because yields are going up. Now, here's the predicament that the Federal Reserve and the U.S. government is in. If yields continue to go up, they're going to have problems with the debt. So there is pressure building in the bond market. Now, can they hold this down? If they do it, they have to do quantitative easing. If they do quantitative easing, it transfers the pressure in the bond market to the currency. So if they were to buy and push yields lower, which I'm sure they're probably doing it already, they're trying to hold this thing down. And if they push it lower, you'll see the DXY go down against other currencies. So I am positioned for what I think will come. Generally, what they'll do is they'll say what they're doing before they do it. Trump has been talking about lower interest rates. I think he's going to lower rates. They're going to do QE. And then you're going to see emerging markets and commodities take off. That's when you see platinum go up. This strong dollar has been holding everything down. This stronger dollar. It's going to roll over. In my guess is it's going to roll over because of the situation that they're in. They're going to do QE most likely and hold it down. Uncle Milty's Ghost, he says, I can't stress enough that the disconnect between the bond market and the Fed means that the Fed's credibility is shot. The bond vigilantes have decided that they want more premium to take on all of this extra debt because the 30-year mortgage is tied directly to the 10-year Treasury yield. Mortgage rates will continue to climb. Therein lies the housing correction that I've told you for 2 years was inevitable. And you can see it already. Home prices are down tens of thousands below their peaks in 2022 already. Well, it depends where you're at. 2 months ago, I warned that the bond market would actually be the deciding factor. So he's saying that the housing market is going to get squeezed because of them losing the 10-year yield. If they come in and buy the 10-year yield and buy it down, I think the housing market's going to take off. That's what I think. But we are in an uptrend in the short term here. So we'll have to monitor to see what rates do. And that's where I'm going to end it, guys. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Don't forget, we've got a Sunday question and answer session at 5 p.m. Mountain Time. That's today, if you're watching that on Sunday. So I'll see you there. We'll go over a lot of stuff. And that's all I've got for today. So we'll catch you next time. This is Finding Value.